Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. I will start this video with a review on the dollar index DXY, which has completed the falling wedge that I noted in the last video on the 12th of July, over here. DXY is now technically bullish with a textbook target at 102.52. With the DXY completing a bullish pattern, that means euro-dollar has now completed its rising wedge, a bearish pattern, and is now technically bearish. This bearish pattern has a textbook target at 110.75. On the 21st of June, I said that dollar yen may be forming a new pattern, a bullish one called a cup and handle bottom. Dollar yen has since trended higher and completed this bullish pattern via a close above 148.64, that is on the 15th of July. The textbook target resulting from this is at 157.41, but note there are resistances at 151.2 as well as 154.74 that can reject dollar yen lower when tested. In the video on the 7th of July, I suggested the potential bullish pattern in dollar CNH, a falling wedge. This bullish pattern was completed on the 7th of July, turning dollar CNH technically bullish. The textbook target resulting from this is at 7.2427. Now note that in recent price action development, we saw the completion and then the correction phase. And this correction phase over here on the 11th of July bounced off the resistance trend line for dollar CNH to resume the upside. Now, after that, we saw after closing above the 20-day simple moving average, on the 16th of July, the downside also bounced off the 20-day simple moving average, keeping the upside bias intact. Moving on to equities, there's only one name that I'll be reviewing in this video. Medtronic is a name that I have not covered since the 17th of February because over here, after completing the head and shoulders bottom, it quickly went into the correction phase. The correction phase lost traction around the $80 mark before rebounding thereafter. I believe Medtronic is now in the bullish resumption phase, and advancing above the neckline at 92.14 will give it an upside boost. Textbook target resulting from this is at 115.51, but note that the psychological resistance at 100 could reject Medtronic lower when tested. I will cover one new name in this video, and it is on Meta platforms. You know it better as Facebook. Price action over here failed to test the upper Bollinger and has since diverged from it, a sign of easing upside bias. Now the latest retreat occurred around the previous high, which has led me to suspect that Meta may be forming a double top, a bearish pattern. This is very early stage and it is on a weekly chart, so it could take a long time for this to develop. The lower Meta falls, the more convinced I will be that this is indeed a bearish formation. Closing below the 20-week simple moving average will give Meta a downside boost, but it needs to close below the neckline at 479.8 to complete this bearish pattern that has a textbook target pretty low at 220. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.